Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to zoom out and have a look at the bigger picture with Bitcoin on the weekly time frame and see how that fits in with what's happening over the last couple of days with the Bitcoin price falling down. I'll also have a look at the 60-day cycle and see exactly how that's fitting in with the current price action. I'll also have a look at the CME Gap, which seems to be giving us a clue of where the price may be going in the next few days. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, relax, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions. So with that out of the way, I'm going to zoom out here on the weekly chart and have a look at exactly where we are in terms of the bigger picture view before we have a look at the analysis on the shorter time frame. So we can see quite clearly we had a double top over here back in 2021. And we've had a brutal bear market all the way down here. And this was followed by a very strong consolidation in this range over here up to the 25,200 level, creating inverse head and shoulders pattern over here. So this is a classic case of a bear market coming to an end over here with a big strong consolidation pattern at the bottom of which we've got an inverse head and shoulders. This is an incredibly powerful pattern to take the price in an upward direction on the overall bigger picture view. So whatever's happening over here on the shorter time frame has to be looked at in the context of exactly what's happened over the last 12 to 15 months here. The two levels that we have to be aware of, which is where the actual range seems to be since we actually broke out with this Doji candle over here on the 13th of March. So we've got this neckline at the inverse head and shoulders at 25,200, having had this inverse head and shoulders here. So this is the neckline. This is where, if the price does come back down to, you'll find incredibly strong support at these levels around the 25,000. Obviously, since we broke out over here, we went up to this big strong wall of resistance, all based on these support lines over here and over here. So this was obviously going to be a very strong resistance point at this level, at around about the 30,000 to 32,000. So with that in mind, it's now created this zone of 30,000 down to 25,000. And really, this is really meant for those people who are not aware of how the stocks work and how the cryptos work. These things are actually designed to shake people out on the way down here towards the support level and to suck people up here at the higher level. And those are what we call the weak hands, i.e. people who are not sure of what's happening. Every time the market comes down, they get frightened into thinking it's going to go much lower, and therefore they get out of the market at the low levels. And then there are people, when the market goes up here, they're so frightened and they don't know what's happening that they actually get sucked in here because they don't want to lose out on the potential move to this side here. And hence the dirty tricks that Bitcoin plays with everybody's mindset here. So let's break this down in terms of the 60-day cycle with that framework of mind, i.e. the resistance point at 32,000 and the support line at 25,200. So what's happening over here? The first thing to bear in mind is that we have a symmetrical triangle over here. So when we came up, it came up into this pattern, and usually this is a continuation pattern. And since we topped out here at the 31,000, and since we came down here, what we've done is we've created the lower highs over here from this point, and then the higher lows from this point. And this is what creates this symmetrical triangle. And all of a sudden, over the weekend, we've now broken out to the downside. This is usually a continuation pattern. So what we would normally expect is for this to break out to the upside. And this is what leads many people to think that this may well be a fake out, because sometimes what happens is that in these patterns, they break out to the opposite side to where it's eventually going to be going. So many times it breaks to the downside and then it just quickly turns around and then moves to the upside, and it actually catches a lot of people out here. So be aware of that. It doesn't mean that this is a fake out, it just means that we need to be aware of the possibility of this happening. But as you know from the previous videos, we were looking at the breakout between this long-legged doji candle here. So if we just have a quick zoom in here to show quickly exactly what's happened. So this is the long-legged doji candle, which has been actually directing and conducting the price action here in between this range, the top of the doji candle and the bottom of this doji candle. The top of the candle is at 30,050 and the bottom of this candle is at 27,230. And we can see quite clearly that the price action is well within this range, so there's nothing to really panic about until we break the bottom of this doji candle here at 27,230. So this can provide a very strong support as this price is coming down, so be aware of that. And it may well bounce off here to go to much higher levels and then retest the top of that at 30,050. So until we break the top or the bottom of this doji candle, then there is no resolution in terms of where this price action is wanting to go. And if we zoom out, you can see quite clearly this is the green line I drew over the last many videos now to show you exactly that from this support over here and this price action all along here, providing support and resistance, resistance over here and here and here, and then back to support over here. So these are extremely strong support and resistance zones. And this again, once again, as you can see from here, it hasn't broken through yet. So once again, this green line is providing an incredible amount of support and very important relevance to this price action that's been going on here. And until this breaks, we really won't know whether this is really properly broken down. And after this green line, we have this dotted blue line, which is the support for that long-legged doji candle I've just shown you. So there's a lot of support just below that. And finally, the support will be at the 25,200 level. And we would normally expect, if it does go down to those levels, for us to have a big bounce to the upside, and that may well create the beginning of the next 60-day cycle. You're probably wondering what this yellow line is, and that yellow line is going to be coming into play somewhere along here. So when we actually finally break out to the upside, anywhere between the next few weeks and months, always be aware of this. Somewhere along the line, this line here, again, is because of this very strong resistance here, third time resistance here at the 31,000. So we know that this is going to be a very important and relevant line once we do get anywhere near it. So this would provide a very strong confluence with other factors that if we do come back to this line somewhere along the line, maybe at 40,000, that will provide a big confluence for the price to be rejected to the downside over here. So if you want to put that on your charts, I would strongly advise you to put that through, because this is a line for the future where this will be a trend that will be very relevant and important. Before I go into the 60-day cycle, just want to make you aware of the CME Futures Gap on here. This is the 4-hour chart, and you can see here quite clearly we have a gap from where this finished here on the Friday and this candle here, which actually restarted the candles for the Sunday evening. So there's a gap now between Friday and Sunday that's now developed. And we know with these gaps, they have a very high probability of actually filling in much quicker or sooner than later. So on our way back up, we're going to more than likely come and fill this gap. So just be aware of that. And that can happen very, very quickly in the next few 4-hour candles or within the next few daily candles. And this is where the 60-day cycle really comes in. The framework will give us some sort of a timeline, a framework of when this could possibly happen. Okay, so this is the 60-day cycle. The last cycle finished here after 70 days. And if we take the measure from there to currently where we are, we're now on day 59 of this possible 60-day cycle end over here. And I put the yellow box here to give you some sort of a fluid and flexible approach that we have of around about the 10 days either side of the 60-day cycle. And we're coming right at the 60-day point here, but we also know that it can go and stretch around about the 5, 10, even a little bit longer time frame over here. And as we've just seen, we're coming to the bottom or the support of this long-legged doji candle at around about 27,230, and that may well prove to be the support or the bottom of this 60-day cycle. If it does happen that we bounce off here at this point, it gives a much more prominent signal that we may well have bottomed out here at the 60-day cycle and have a bounce here. If it actually breaks this in the next day or so, that would say that we're going to be going much deeper into the 60-day cycle and more towards this green line here at around about the 25,000 mark. So we'll just have to wait and see what happens, but certainly we're now getting to the final phase of the 60-day cycle where we would expect a bottoming out before the next bounce. And there are two time frames that you should be aware of to have a look at the exponential moving average. The 8 EMA, the blue line here, we've now clearly on the daily chart actually come back below that 8 EMA. However, on the weekly chart, you can see quite clearly we're still finding support right on the 8 EMA on the weekly chart. So on the weekly chart, we're seeing quite incredible support all the way along here and currently as well over here. So for anybody who wants to panic and actually get out of the market, please be aware of all these signals that really there isn't any need to panic unless we start getting below the 25,200 mark. If we do break the 25,000 mark, I would be worried myself. So the question is, am I expecting the price to break below the 25,200? Certainly at the end of a 60-day cycle, when we're getting into the final phases, I wouldn't expect that to happen. Yes, we can have a quick rapid move to the 25,000, but we shouldn't really be breaking these levels at all. But if we do, we'll be prepared for that, because that would mean that we're going to have a much bigger fall, but certainly I'm not expecting that to happen. Okay, so I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, then leave them in the comments below. I will be doing a special Bitcoin miners video on Wednesday, which will show us a potential top for the Bitcoin miners in this current bull market over the next 2 to 3 years time. If you want to have access to those videos on the Wednesday covering the Bitcoin Miners Club, then all you have to do is to click the join button here below any of my videos, and this will give you access to all the content regarding the Bitcoin miners. Okay, until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.